Hey everyone, welcome back to Corporate Decoder, the place where we really dig into the numbers to see if companies are as good as they say they are. This year, Zscaler is giving us the full picture with their 2025 proxy statement, a look under the hood at how the company is run and how much its top people are getting paid. So what is the big deal with this filing? Well, it is not just about celebrating another year, it is about understanding Zscaler's strategy, its board, its executive pay, all things that can really tell us about the company's health and future. We're going to break down their financials, their executive compensation, and even that big vote on whether to declassify their board. Before we dive in, if you like getting these easy to understand breakdowns of complex corporate documents, make sure you hit that subscribe button and ring the notification bell. Also, we have a fantastic community discussing these reports over on Discord. The link to join is in the description below. Alright, let's get into it. Zscaler is inviting its shareholders to their 2025 annual meeting, which is set for the 12th of January 2026. This is a virtual meeting so you can join from anywhere. The big topics on the agenda include electing new directors, ratifying their accounting firm, and a non-binding vote on executive pay. Now, about the folks guiding the ship, the board of directors. Zscaler currently has 9 directors, and most of them are considered independent, which is a good sign for good governance. They have a staggered board, meaning only a third of the directors are up for election each year. This is something a lot of companies do for stability. The company is nominating 3 people, Andrew Brown, Scott Darling and David Schneider, for their Class 2 director positions. If elected, they will serve for 3 years. The company believes these individuals bring valuable experience in technology, finance and leadership. Looking at the skills of the board and the nominees, it is clear they are all bringing something to the table. They highlight things like senior leadership, industry expertise, financial knowledge, and cybersecurity. It is interesting to see cybersecurity listed so prominently given Zscaler's core business. This shows they are focused on the risks and opportunities in their specific industry. The company is also very clear about who is independent on the board. They distinguish between directors who have relationships that might impact their judgment and those who don't. This transparency is important for investors. It seems most of the directors are independent, but Jay Chaudhry, their CEO and chairman, and Raj Judge are not considered independent according to NASDAQ rules. This is a common setup where the top leaders aren't independent for obvious reasons. Speaking of Jay Chaudhry, he holds both the CEO and chairman roles. The board feels this structure works well for Zscaler because it offers strong leadership and clear accountability, especially with so many independent directors on the board. They don't have a lead independent director, but emphasize that all independent directors work closely with the CEO. During the fiscal year that ended the 31st of July 2025, the board held 4 meetings. Each director attended at least 75% of the meetings for the board and any committees they were on. They have 3 key committees: an audit committee, a compensation committee, and a nominating and corporate governance committee. All these committees are made up of independent directors and seem to be following all the required rules, which is good for staying compliant. Now let's get to the juicy part, the financials. Zscaler had a pretty strong fiscal year that ended July 2025. Their revenue grew by 23%, reaching $2.67 billion. Their calculated billings, which is a way to measure future revenue, also jumped 24% to $3.25 billion. This is where it gets really interesting. While Zscaler likely reported a GAAP loss from operations, which is common for fast-growing tech companies, their non-GAAP income from operations, which excludes certain expenses like stock-based compensation and amortization, showed a healthy 31% year-over-year increase, reaching $580.1 million. This tells us their core business operations are generating solid profit, even if accounting rules make the overall profit look different. The non-GAAP operating margin improved to 22%, showing they are becoming more efficient as they grow. Looking at their calculated billings over the last few years, we see a consistent upward trend. Revenue grew from $431.3 million in fiscal 2020 to $2.67 billion in fiscal 2025. That is a 520% increase. And their GAAP income from operations has exploded from $38.2 million to $580.1 million. This shows that Zscaler is not just growing, it is growing profitably on an operational level. They also have their auditors PwC coming up for ratification. PwC has been their auditor since 2015. The fees paid to PwC for fiscal 2025 were about $5 million, which seems reasonable split between audit tax and other services. This is the say on pay vote. Zscaler's executive compensation aligns with their pay for performance philosophy. Most of the pay for their top executives is tied to company performance through bonuses and equity awards. For fiscal 2025, their CEO Jay Chaudhry receives a nominal base salary of just $23,660 and no cash bonus. This is a clear signal that his compensation is heavily weighted towards long-term stock performance and company success. Other executives also have their pay tied to revenue billings and non-GAAP income from operations. They are recommending an annual vote for say when on pay, which means stockholders will get to vote on executive compensation every year, giving investors more frequent input. This is generally a good sign of responsiveness. Now for a really interesting one, Proposal 5, this is a stockholder proposal to declassify the board, meaning all directors would be elected annually instead of on a staggered 3-year term. The company recommends voting against this. They argue that a classified board promotes long-term focus, stability, and customer confidence. They also point out that most of their peer companies have classified boards. This is a classic corporate governance debate where stability and long-term vision clash with shareholder direct accountability. Zscaler believes their current structure serves them best. Looking at the executive team, we see some recent changes. Kevin Rubin is the new CFO. Adam Geller is the Chief Product Officer, and Raj Judge has joined as Executive Vice President of Corporate Strategy and a Director. Rumo Kanessa, their former CFO, retired in June 2025 after a long tenure. When we look at the summary compensation table for fiscal 2025, we see that while base salaries are relatively modest for most executives, the bulk of their total compensation comes from stock awards. This is typical for tech companies and reinforces the pay-for-performance model. For example, Mike Rich's total compensation in fiscal 2024 was over $39 million, largely due to stock awards and options. For fiscal 2025, Kevin Rubin's total compensation was over $30 million, again driven by stock and option awards. This shows the company is heavily investing in its executives through equity, which aligns their interests with shareholders and incentivizes long-term growth. The CEO pay ratio is quite interesting. Jay Chaudhry's total compensation for fiscal 2025 was reported as $23,660, while the median employee compensation was $142,139. This means the CEO's pay was about 0.17 times that of the median employee. This is a stark contrast to the enormous stock awards received by other executives and directors. This situation is likely because the CEO has a nominal salary and no cash bonus, and his extensive long-term equity compensation is not fully reflected in that year's snapshot, since much of it vests over multiple years or is tied to performance metrics. It highlights the company's strategy of heavily weighting executive pay towards long-term equity and company growth, which is a key tenet of their pay-for-performance philosophy. Looking at the pay versus performance table, we see that for fiscal year 2025, the compensation actually paid for the CEO was over $47 million. This is a significant increase from prior years and mostly reflects the valuation of his equity awards. For the non-PO NEOs, the average cap was about $25 million. This table really shows how much equity awards influence total compensation and why it is important to look beyond just base salary and bonus. Finally, let's talk about who owns Zscaler. AJ Mangle is a significant shareholder, owning over 29 million shares, about 18.2%. Jay Chaudhry, our CEO and chairman, also holds a substantial number of shares, around 16.8%. The Vanguard Group also holds over 11 million shares. It is reassuring to see that key leadership and a major institutional investor like Vanguard holds significant stakes. So my take on Zscaler is that they are a company laser focused on growth and operational profitability. Their financial performance, especially on a non-GAAP basis, is strong, showing their core business is healthy and efficient. The executive compensation strategy, heavily favoring equity in exchange for long-term performance, is a clear signal of their confidence in future growth and shareholder value creation. The recent executive hires and their compensation packages reflect a strategy to bring in top talent to drive this growth. The decision to recommend voting against declassifying the board suggests they prioritize stability and long-term strategy over immediate annual accountability. This is a calculated move that aligns with their business model, but it is something shareholders should consider carefully. The sheer scale of their equity awards to executives also underscores the high stakes in achieving long-term company success and stock appreciation. In conclusion, Zscaler appears to be on a solid growth trajectory, with a clear strategy for rewarding its leadership tied directly to that growth. The question for investors is, do you agree with their long-term vision and their approach to board governance? Alright, that is our deep dive into the Zscaler proxy statement. What are your thoughts on their executive pay strategy and their board structure? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community for more discussions. Thanks for watching, and we'll see you in the next one.